Hi, this is Keith Schneider, CEO of MarketGauge.com, and this is October 16th, 2016 edition of Market Outlook. So markets remained under pressure. Some outside influences like pressure on the British pound, movement into the US dollar, resulting in downward pressure on US equities and gold and silver as well. So let's take a look at what I had sort of highlighted in the text, which is volume patterns are disturbing, right? Look what's happened here. We now have 0 accumulation days in any of the index. I haven't seen that in quite some time. And as a sell signal, or really indicating big institutional distribution, we've got 5 or 4 days of distribution in all of the indices. Of course, the price action across the board was down as well. So not a good sign here. I give this volume pattern a big negative. Now, let's take a look at sectors and see what's happening there. Well, a couple of things to highlight, and one of them is that the strongest sector, which was and still is semiconductors, got hit pretty hard. Part of it was a result of what's happened with Samsung and the fires on the phone, putting pressure on semiconductors and the component suppliers to Samsung, and then the trickle-down effect across the board. But nonetheless, look what's happened here. We're down 2.9% on the week. So what was helping us before was semiconductors were really outperforming and continuing. So we like to see that in a leading sector, but we did not get very much help, in fact, negative help. So that did not help whatsoever. Now, the other thing to note, which is important, is that we've got a lot of sectors here that are in distribution mode, right? So in terms of strength, right, the first thing, obviously, bullish is your most strongest. You go into a warning phase where you drop under the 50-day moving average, and distribution definitely is sort of in alignment with what we're seeing on the volume pattern. So that's even worse, where the market is trading under the 200-day moving average. So we've got some real weakness in the sectors, actually underperforming what I would call the action in the S&P. So the other thing to note is what was strong last week was utilities, right? So in spite of the drop in interest rates, the drop in prices in interest rates, meaning rates increasing, utilities actually was your strongest sector in the market. That means flight to safety. Now, we haven't gotten to a situation where utilities are really outperforming stocks in the S&P over the past month on a ratio basis. So our risk on indicator of looking at utilities versus SPY is still risk on, but definitely weakened a bit. As you can see, the spread between utilities and the down move in the S&P moved in favor of utilities. So if we scroll down a bit more, you can see more continued deterioration. We've got more sectors that are dropping in terms of their performance over the last 200 days. So we've got a lot of sectors dropping off in terms of strength, which is indicated by that distribution and number of stocks in the warning phase. So again, not a good overall scenario in the sector view of the market. Let's take a look at market hotspots and just see where the strength and weakness is occurring globally. So one of the things to note, right, is certainly, look, leaders last week were corn, coffee, right? And so commodities and oil, right? So take a look here. You can see oil is up, natural gas, one of our holdings, also up. And so in essence, you've got some real strength in commodities across the board. Not every single commodity, but a lot of them. So strength in commodities and weakness in bonds, and as you can see, bonds down 2% for the week over here, or close to 2%, and that helped put pressure on stocks as well. So interesting. The other thing to note, Brazil and some of the other Latin American countries really doing well. That is interesting, and that's also in alignment with commodities. So Latin America commodities looks like where markets are focused on right now. Well, that's the strong markets at the moment. So now let's take a look at some of the other market internals as well. And that picture we'll go into detail here. So a couple of things. As you can see, markets in terms of up-down volume sort of deteriorated over the week, but not really in an oversold condition, but definitely in a negative position. So I give this part, right, there's three parts to reading the market internals here, right? Up-down volume on a short-term basis, more of a minus, right? In terms of the McClellan oscillator, we're getting and touching the beginning of oversold levels, but again, they can get a lot more oversold, and they could sit and basically work sideways before another thrust down and another test. So when I look at this, until we really turn up convincingly and start moving back over that 50% level or zero level, depending on the indicator, it's 50% in the up-down volume ratio. The zero level is sort of the neutral level. So I'd like to see the McClellan oscillator get oversold, start hooking up, and then clearing the zero level or the midpoint. And the same thing in the advanced decline. So we're starting to get a little bit oversold, but not really there yet. You still got some more room. I would really like to see the up-down volume ratio also punch through the lower levels so you get confirmation across all three. But net, I look at this and I say we're basically got three strikes here, and markets are definitely under pressure. Now, of course, this thing can hook back up, and that's what we're going to be looking out for. But my expectation is it certainly could come from a lower level. Now, the one caveat to that is what's interesting is the price level that was taken out on Thursday. So you had a washout of this particular level, and the market came back, closed above this critical level. So this was an important low. After the big drop in early September, we've basically been working sideways. So yeah, we did get our sell-off as expected under that 214, 213.50 level, dropped all the way back down to just about 211, and then closed back up. But you're now in between resistance up here and what I would consider sort of a washout, and closing back above this low here is sort of important. So we're in between these two key levels here. However, again, these market internals definitely showing potential for more weakness. All right, let's take a look and see what our next chart is. And I think that's this is the NASDAQ composite, and sort of a very similar scenario. We're sort of touching the beginning of what we would start looking for in terms of oversold. but not quite there with a real nice flush that we've seen in other sell-offs. So considering the overall vulnerability of the market, I would like to see another bigger flush. So overall, again, more to the negative here. We haven't really gotten that on the up-down volume to the downside, right? We just closed above it, hooked up a little bit on this meager rally on Friday, and again, just sitting, right, without much of a bounce on the advanced declines and our McClellan oscillator, which looks out a little bit further. So I would consider this more of a negative than a positive until we see some real confirmation and moving back above the dotted line, which is our midpoints here. And so that, if we do get that and a move back above the 10-day and the 50-day moving average, that would be a real positive sign. So Friday's highs, really critical. Thursday's lows, really critical in pretty much all the key equity markets that we're looking at. Okay, let's take a look at a couple more indicators. And let's see what we have here. Next chart. Okay, this is new highs, new lows. And again, you can see deterioration. Last week, we were sitting above the 70% level, looking pretty good. Right now, we're touching it. I would call this more of a neutral than anything else, although vulnerable with the short-term trend looking like it's trending lower. However, what is interesting and a little bit more serious is what's happening in NASDAQ, right? So this was the leading index. It looked like after the this sell-off here from Brexit, we got a nice move back up above the 70% level, and we were sitting well above that 70% level, and now we flipped down under it and are trading under the 50-day moving average. So not a good sign. Price deterioration in NASDAQ and certainly the market internals. So again, you can see we're weakening across the board in all these market internals. All right, let's take a look at a couple more charts here. Here we have the volatility chart. And again, this one, slight deterioration. I would still give this a more favorable reading looking at the absolute levels. We traded, yes, above the 50, but we're inside the Bollinger Bands and back under the 200 with Friday's close. So I give this more of a positive to neutral rating. We did increase on the sell-off and the pressure, but not as much as one might expect, and you're certainly not at overbought or oversold levels. So being in the neutral is sort of a positive for the market and for how we read this indicator. All right, so one of the other things last week we were talking about the ratio. So definite deterioration in this. This definitely put us on a sell signal. As you can see, we were sitting just above the 1.2 level, which was really sort of supportive to the market overall. Again, when you're in these levels and the moving averages are sideways to turning up, which is where we were, that's more of a positive. But I had warned that any movement beneath 1.2 with all of the averages in conjunction moving down is exactly what we got within a couple of days of the beginning of the week. So definitely under more pressure here in terms of the final flush and sell off here. You definitely got some more room to the downside. So that's how you have it. Now on the positive, you do have a slight hook here on the actual ratio. So a little bit of improvement with Friday's action, not enough to convince me that all of this is turned quite yet. And again, what we really want to do is make sure that we're watching where the 10 and the 50-day moving averages are sitting. As you can see, this green is the 10 and the magenta is the 50. First line to the upside, and could reverse things, is really a move back above the 214.50 to 215 level. And if we do, that would take out the meat of a lot of this action here, and that would be really helpful, right? So that's your first level of Friday's highs. We take that out. That's a positive. So keep an eye on that level. All right, let's take a look at one other chart here. So what I want to do is I just want to take a detailed chart look at bonds and our real motion indicator. So this is pretty important to note. For those not familiar with real motion, it's really a way that we measure the absolute momentum of a particular instrument benchmarked against a key moving average. Now, in this case, chart up here is pure price movement. This is your 200-day. And if you take a look, you can see the 50-day, which is the blue, right, stacked above the 200. One of the things that just happened over the last week, for the first time, right, going back all this year, is that our fast, our 50-day of real motion, crossing under the 200, which means market is definitely in bonds losing critical momentum. And of course, the breakdown under the 200-day moving average is something that just occurred for the first time also in many, many months. So you got a couple of firsts here. Momentum definitely breaking down hard. You can see it started in here where we started failing the this key moving average of momentum here, and definitely acting opposite the price movement itself. So momentum often precedes price. If you want to find out more about these momentum indicators, we call them real motion. You can go to our website and find it under products and services. All right, so again, overall here, we've got a situation where deteriorating market internals, bad volume patterns, pricing patterns looking heavy, with the exception of the fact that we did clean out the stops and we could actually potentially reverse direction if we can get above Friday's highs. Those are critical resistance levels with some more layered on top, but that's your first line of demarcation. All right, hope this helps, gives you the overall perspective. See you next week, and bye for now.